Hello, friends. I'm Karthik Wagela from Anand Rathi, and we are back with another weekly podcast episode with Nilesh Jain, derivatives and technical analyst at Anand Rathi. Thank you, Nilesh, for joining in our podcast series to share your market outlook for the week. Hi, Nilesh. Welcome to another podcast. How are the market looking on charts, and what are the momentum indicators indicating?
Hi Karthik. The markets have continued to gain the momentum for the seventh consecutive week, where the rally that we are witnessing across the global markets are purely driven on the back of liquidity. In the Indian equities, so far the FIIs have infused more than 40,000 crore in the month of December in cash segment. And if you look at the structure for the Nifty, technically it has formed a bullish candle on the weekly scale, and on the daily chart it has formed a tweezer top candlestick pattern, which is considered as a bearish reversal pattern. Hence, to negate this formation, the Nifty index has to take out the highs of 13,773 levels, and above that, we can expect further upside momentum towards 13,900 to 13,950. It is also making a higher high and higher low formation on the weekly scale from past 7 consecutive weeks, which means that the previous low of 13,447 will now act as an immediate support. The momentum indicators and oscillators have reached the over territory on the daily chart, where RSI is currently trading at 80 levels, which indicates that some profit booking from the higher levels cannot be ruled out. Thus, one should refrain from creating any sort of aggressive long positions at the higher levels. Now, if you look at the volatility index India weeks, which is hovering near 19 levels from past 6 weeks now, and it is still very much in the comfort zone, and it is likely to remain in the range of 15 to 24. Hence, the bulls are likely to have the upper hand in the market. On the other hand, the Bank Nifty index, which underperformed compared to the Nifty index and ended the week with a marginal gain of around 0.36%. On the weekly scale, it formed a doji candlestick pattern, which indicates indecisiveness amongst the participants. Now, a decisive move beyond 31,000 levels, which is a psychological barrier, will provide a further momentum towards 31,400 to 31,600 levels. On the other hand, the immediate support, which is now placed at 30,000, which is again a psychological support for the Bank Nifty. Overall, for the coming week, we can expect Bank Nifty to oscillate in a broader range of 30,000 to 31,400.
Can you share your few observations about Nifty open interest levels for coming week?
On the derivative front, a fresh put writing was seen at 13,500, 13,600, and 13,700 strike on Friday, where 13,700 strike hold the highest open interest of 23 lakh contract, which is likely to act as an immediate support, followed by 30,600 for the coming week. On the call side, fresh addition was seen at 13,900 and 14,000 strike, where the highest open interest is placed at 14,000 strike of approximately 33 lakh contract. So the overall option data indicates a broader range of 13,500 to 14,000 for the coming week.
Since the Nifty index is at all time high, what kind of strategy one should deploy to trade in the Nifty index?
So Karthik, the kind of rally that we have seen so far in the Indian equities, it looks like that market have reached the over territory, and it is not advisable to trade in the index where the risk and reward is not favorable and the upside seems to be limited. So it is advisable to trade with the option strategies based on the data of the Nifty index of the weekly expiry. We are expecting a moderate up move in the coming week where the upside seems to be limited to 14,000 levels. So we are advising to initiate a bull call ladder spread where one can buy one lot of 13,850 call strike at 51, simultaneously sell one lot of 13,900 strike at 35 and one lot of 13,950 strike at 23. So the total inflow from this strategy would be 7 points as per the closing price on Friday. The maximum loss would be substantial if Nifty expires above 14,007 levels. So one should keep a stop loss in the underlying of 14,000. The maximum profit of 57 points could be gained if Nifty expires in the range of 13,900 to 13,950. The lower break-even level comes at 13,843 levels, whereas a higher break-even levels comes at 14,007 levels. So since this strategy is initiated with an inflow of 7 points, there is no downside risk even if Nifty expires at or below 13,843 levels, which is the lower break-even point. The main objective of this strategy is to gain from a moderate upside momentum that we are expecting in the underlying and also the time decay.
Thank you, Nilesh, for sharing your valuable inputs with us. I am sure our listeners have gained great insights from you.